We're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist over at Standard Bank. Thanks so much, Nomvuyo, for joining us this morning. Let's get straight into it because this morning we've got the Rand back at that 8 mark. Some weakness filtering through after, or some strength rather, filtering through after the weakness that we've seen. What are you making of the kind of activity we're seeing right now? It's pretty much headline driven and depending on those headlines coming through from the Eurozone territories.
Hi, Alishia. Yes, you're absolutely right that it does seem to be headline-driven at the moment as far as Rand trade is concerned. And yesterday was actually quite interesting for that reason, because after that S&P announcement that 15 of the 17 Euro countries are facing a potential downgrade, we saw the Rand weaken, and that was in line with the move in most risky assets. But then in the afternoon, it came back quite significantly, and as you mentioned, opened up this morning very close to that 8 Rand level, and does seem to be poised for further strength today. That's in the absence of any adverse news or headlines out of the Eurozone. It does seem that at the moment the market is looking forward to that Eurozone summit at the end of the week, and there's growing optimism that whatever the resolutions are out of this summit, that they could be the ones that finally bring an end to the crisis.
Of course, there's still a lot of tentativeness about Nomvuyo. All eyes, as you say, on that EU summit on Friday, but also the ECB meeting come tomorrow. It's the final meeting that the ECB will be holding for this year, and expectations there for a rate cut. Safe to assume that we've got investors sitting on the sidelines until those two key events and risk events materialize?
No, absolutely. I certainly think that that would be the case, because those are the two big events this week primarily. But, you know, there is also some local data out. So as far as the Rand's concerned, it could take some direction from that data. We haven't seen it thus far with reserves. Doesn't look like the Rand reacted meaningfully at all. But we do still have retail sales out today, and that could provide some direction.
Let's hone in on that reserves data that was released on home ground this morning. Of course, expected to show that reserves dipped last month, and that's certainly coming through, but slightly more so than the market had been anticipating, Nomvuyo.
Yeah, absolutely. I mean, the Rand did weaken in November, so there was an expectation that that could have hampered reserve accumulation because it makes it more expensive to accumulate dollars. But certainly in the event, the decline was much sharper than was anticipated. And that was due mainly to revaluation effects. There's also the effect of a lower gold price. And revaluation then comes back to the fact that both the euro and the pound lost some ground against the dollar. So when you convert those into dollars to get your dollar-denominated reserves amount, that proved to be quite a significant drain on the overall reserves.
It's not the only data point that will be affected by the kind of activity we're seeing in the Eurozone territories right now. Tomorrow we're anticipating current account numbers as well, and that expected to show the kind of effect we're feeling right here in the South African economy.
No, absolutely. I mean, tomorrow is going to be an important day, quite as you mentioned. Besides the ECB meeting, there's also the current account data coming out. That's going to be quite key for the Rand. As we mentioned earlier in the week, we're anticipating a slight widening in the current account. And so as far as the Rand's fundamentals are concerned, that such an event could undermine the Rand from that point of view, but we still see a strengthening bias into year end. So whatever Rand weakness may come through from such an outcome in the data yesterday, we think would be fairly temporary.